To the risk events video for the week beginning the 21st of September 2015. Now, basically, this week's a very quiet week in terms of data. Not much coming out. There's not really massive amount of trading opportunities. There's a few things we're going to talk about. The best thing to do, as ever, is to go through each day one at a time. And basically, just before we do that, we had the Greek elections over the weekend, and Syriza party won with a clear majority. And what that means is basically that they were the party that were in power in the first place. Basically, they were brought in to try and negotiate the terms, if you will, of the debt repayments for the country, etc. All that's kind of been agreed. This election has kind of reaffirmed that they still have the people's support, despite having to kind of go back on a few things they had to say. And generally, in terms of what the impact it will have on the euro, probably very limited, seeing as Syriza party were in power before the elections took place. So probably not going to have much of an impact, but it's just worth mentioning. Now, what we're going to do, let's go through day by day. So we'll start with Monday the 21st. As ever, nothing really going on the Monday. It's a Japanese bank holiday, and Monday and Tuesday, in fact. Probably not going to affect the European and US markets too much, but it's just worth bearing in mind that the overnight sessions will probably be a little bit quieter than they are normally. We do have FOMC members speaking, and we also have the Bank of Canada Pelosi speaking on Monday. Not really expecting too much from those. There's more important things coming later in the week, which we'll discuss, which will have more of an impact. So I'm not really looking for any of that stuff to have too much of an impact on the markets. If we go to Tuesday, September 22nd, again, as you can see, another Japanese bank holiday. And again, very, very quiet day. This time we've got FOMC member Lockhart speaking. But apart from that, not really expecting any of this data to have any particularly significant impact in terms of moving the markets. If we go to Wednesday the 23rd, we've got a little bit of a flurry of data there. Again, you can see the Japanese bank holiday continues on. But we do have Chinese data. We've got the flash manufacturing PMI, which is expected to tick a little bit higher, 47.6 versus 47.3. Still in contractionary territory, but kind of a little bit of an improvement. Is that going to move the Aussie dollar? Probably not really, unless there's a significant deviation. And what we'd look for really from Chinese data is significant deviation to the downside. So we want to see negative data or worse than expected data, because of course our overall view on the Aussie dollar is fairly bearish. Aussie dollar's having a little rally of late, but generally the outlook isn't too great for the Australian economy right now, and we're not expecting the Bank of Australia or the Reserve Bank of Australia to certainly not expecting to do anything hawkish over the next few weeks and months, possibly maybe even another cut, but it's all debatable. But generally their leaning is towards the dovish side. After that, we've got European data. We've got manufacturing PMIs from France, Germany. We've also got the overall Eurozone manufacturing PMIs as well. Generally, this data is expected to come out better. The German data, interestingly, is expected to come out a little bit lower, which is surprising. And the overall is expected to come out broadly in line with what it was previously, but again, fractionally a little bit lower. This data is not really having too much of an impact at the moment. There's other stuff moving the euro right now. You probably noticed over the last few weeks, we talked about this quite a lot. But basically, we've got safe haven flows, we've got unwinding of carry positions, we've got all the stuff that happened with Black Monday and the kind of sell-off that caused from that a few weeks ago. So the euro's been very well bid, which means that the market's been buying euros. It's been kind of held up quite high above that 110 level. And for all those reasons what we just mentioned. So this data probably not going to have too much of an impact because the market's got its eyes on other stuff. It's not really tradable. It's not something I'm looking to use to find an opportunity. Later in the day, we've got core retail sales from Canada. No expectation for this. Previous was 0.8%. Again, generally data from Canada hasn't been too hot. So what we're looking for here is negative data. So if we can get something coming out worse than previous, if there's a forecast that pops into the calendar before, sometimes that happens. Look out on the morning of the 23rd. Very often the economists will have been polled by then, and there'll be a forecast there. So depending on what that forecast is, generally we're looking for worse than expected data from Canada because the overall fundamental picture of the Canadian dollar at the moment, particularly with the recent sell-off in oil prices, of course, is down, basically, it's bearish. Later in the day, we've got ECB President Draghi speaking. Again, interesting to see what he says. The Fed didn't hike in September. Okay, everyone was kind of thinking maybe September the 17th will be when the Fed maybe pulled out their first rate hike. They didn't. They didn't really even mention the possibility of a hike. A lot of people thinking that hike might not even come in 2015 right now. So it'd be interesting to see what Draghi says. In the Fed's kind of comments, they did show a little bit of concern, or they kind of showed that they were watching what was going on the global scale, and that if things started to deteriorate too much, they probably would be more inclined to sit on the fence and just kind of wait and see how that plays out rather than jumping in with a rate hike. So it'd be interesting to see what the ECB have to say about that, because if the Fed are concerned, then that means the other central banks will probably be concerned as well. And what that could mean for the euro is an increase in QE. Lots of people think that the QE program in Europe will go on beyond September 2016. And the ECB have said it themselves that they're prepared, they're fully ready to launch more QE if needed. And of course, the euro has remained well bid. So could be a very good opportunity in there somewhere. Probably not really right now, but it will be interesting to see what Draghi says nonetheless. Maybe you could make some pips in a short-term position. But as the higher the euro goes and the longer it stays up there is an opportunity building there to short the euro, but probably not yet. But just keep your eye on that over the next few weeks and months. As we get closer to that more, any announcement of more QE from the ECB. Later in the session, we've got a couple of bank members. We've got MPC member Broadbent. We've also got FOMC member Lockhart from the UK and the US, respectively. And of course, we've got trade balance from New Zealand. Again, just looking for worse than expected. Trade balance isn't really one that moves the New Zealand dollar too much, so I'm not really going to get too excited about that. And again, like I said, there's not really any trade opportunities in there for me personally, if I'm being honest. But if we move to September the 24th, which is a Thursday, this is the first day when we've got some interesting stuff going on in the session. First of all, we've got German IFO business climate. Again, not really anything I'm looking for. European data is not really a big one at the moment. The targeted LTRO, which is of course the program they launched before QE to try and stimulate the economy or stimulate the financial system more like. Again, not really a massive market mover unless there's some significant change or deviation to what they're doing, which there probably won't be. The LTROs are kind of ticking along nicely, and now they've launched QE. Basically, all the focus is on that, so probably not really expecting too much from that. US data, core durable goods and unemployment claims. Again, core durable goods expected to come in lower than it was previous, which of course was lower than it was before that. A deterioration in US data. The US data is going to be sensitive now. Maybe not this set of data, but US data generally. We've got some coming up on the Friday, which we'll talk about in a moment. But every time we get negative deviation, I've got a feeling the market will probably react more to the negative deviations than it will to the positive deviations, simply because the Fed aren't hiking. Everyone's got so worked up and excited about it over the last 12 months. If it doesn't happen in 2015, the market's going to be more inclined to sell US dollars because of how kind of bid it was, how much the market bought the dollar in the first place. There's a lot more to unwind from those long positions. So just keep your eye on that data. If we get some negative deviations, could potentially be a short-term opportunity. But like I said, durable goods, unemployment claims, it's not really data that's that massively important. Finally, penultimate data or release or event for the day is of course Yellen speaking. It's very interesting to see what Yellen says after we had the rate decision last Wednesday. So it'll be very interesting to see how she's talking, what she's saying about monetary policy, if she even does comment on monetary policy, what the concerns were, any clues of when the Fed are going to hike or what they're thinking and why maybe even why they didn't hike in September. Because if they didn't hike because of what's going on in China or with oil prices, then of course that stuff's projected to go on until the end of the year. It could mean that there's no hike to come. And generally, the Federal Reserve will warn the markets when they're going to hike. So unless we see some warnings of that, it's very unlikely the hike's going to happen. So again, very interesting to see what Yellen says. And particularly now, we're in this time where every word is going to get really, really closely examined by the markets. The final one of the day, of course, is CPI from Japan. We've got the Tokyo and the National, both expected to enter deflationary territory. The core national CPI, for the first time in a while, back into deflation. That's very bad news for Japan. Of course, the Bank of Japan are in the middle of a QE program or second round of QE. The big question on everyone's lips is, will the Bank of Japan do more or add to their QE program on October the 30th or the end of October when they have their next monetary policy meeting event? It's a big one because it's the anniversary of the second round of QE. They did it in October 2014, kind of unexpectedly. They've been saying it's not going to happen, it's not going to happen. No one's really expecting it this time. Everyone's kind of believing what they're saying. They changed the way they measure CPI to kind of fudge the numbers and make it look a little bit better than it was. Market's not really buying it, and their goal is to get to 2% by this time next year. So do you believe, or do we believe as traders, that they're going to get to 2% as they are, looking at CPI continue to fall month on month and now back into deflation? Is it going to suddenly rebound, or are they going to have to do more? The word on the street, or the word on trading desks in the city, and everyone I speak to, is that they're probably going to have to do more. There's a very good chance it's going to be in October, in my opinion. It might not happen, but the longer it goes on, the more they're going to need, the more extreme they're going to need to go, and the more they're going to need to, the harder they're going to need to hit it. So it seems to me like they probably will should move in October. It's going to be a very interesting meeting to watch for sure, but this CPI figure will give us a very good clue as to whether or not they're going to be kind of pressured into more action or not. Of course, if those figures come out above zero into positive territory, then that takes the pressure off and makes less likely the Bank of Japan are going to do that. If it comes into deflation or maybe even lower than 0.1, then it puts a lot of pressure on the Bank of Japan to act and appear in control. So that's probably one of the biggest events of the week to keep your eye on the 24th. Now, if we move to the final session of the week, which is, of course, Friday, we've got one big data point of the day. Of course, US final GDP expected to come out 3.7. Because this is the final reading, you get 2 or 3 readings throughout the year or the quarter. This one is the final one. So this is the one the least likely to have any deviations. So it's the most solid, it's the most predictable, it's the least likely to get a reaction. But as we said, if for some reason there is a revision or a change to the outlook, the final reading is revised down significantly, we could see an overreaction and a big sell-off on US dollars because of the fact the Fed haven't hiked yet. and September the 17th came and went. So just to keep your eye on that one. Probably not going to be anything in it, but just keep your eye on it. So in terms of trade opportunities, you're going to get your trades basically by watching the news feeds, looking out for comments, events, deviations, things that are unexpected basically in the short term. Probably you're most likely to get a trade opportunity. There's nothing really to trade into, and looks very unlikely there's going to be much to trade out of in terms of economic data. But that's the information nonetheless. That's how we're planning for it. And if you've